This is Friday, January 30th, 2026, the last trading day of the month, the last day of the week, and silver just crashed from 121 to $75, $26 gone in a matter of hours. Gold crashed from $5,600 to $4,700, $650 erased. If you're watching this right now and you're panicking, I need you to stop, take a breath, and watch this entire video. Because what I'm about to show you does not add up. The numbers don't make sense. The story the market is telling you is not the real story. Silver crashed 22% this week, one of the biggest weekly crashes in years. And yet right now, at this very moment, you cannot buy physical silver. The Perth Mint in Australia has suspended sales. The US Mint has suspended sales. The Royal Mint in the UK is out of stock. Dealers in India are defaulting on deliveries. Costco has implemented purchase limits. Let me say that again so it sinks in. The price is crashing, but you cannot buy the product. Does that make sense to you? Does that sound like a real market? In a normal market, when price crashes, supply increases. Sellers show up. Product becomes available. That's how markets are supposed to work. But that is not what's happening here. Here, the price is collapsing while supply is vanishing. The price is going down while the world is running out. Something is very wrong. And by the end of this video, you'll understand exactly what it is. If you're new here, this channel focuses on breaking down what's really happening in markets, beyond the headlines and surface-level narratives. If that kind of analysis matters to you, subscribe now. And if you find value in this breakdown, hit the like button. It helps get this information in front of more people who need to see it. Now let me explain why this crash is not what it seems. A few days ago, I made a video where I warned that $117 was a critical level for silver. I explained why a sharp move lower was likely. I showed a long-term historical pattern. At the time, sentiment was extremely bullish. Now here we are. Silver collapsed from $121 to $75. But here's what I did not expect. I did not expect the physical market to completely break down at the same time. I did not expect mints around the world to suspend sales. I did not expect such a severe disconnect between paper and physical. That's what we need to talk about. Pay close attention. Because understanding this could save you from making a major mistake. How the silver market actually works. Most people don't understand how silver is priced, and that misunderstanding is costing them money. There are two silver markets, not one, and right now they are telling completely different stories. The first is the paper market. This is where futures contracts, derivatives, and digital silver trade. This is where banks, hedge funds, and institutions trade billions of dollars worth of silver every single day. But here's the key point. They are not trading real silver. They're trading paper promises, contracts that say silver will be delivered in the future. Most of these contracts never result in actual delivery. It's a financial game, numbers on screens, casino chips. The second market is the physical market. This is real metal, coins you can hold, bars you can stack, silver that actually exists. These two markets are supposed to be connected. The paper price is supposed to reflect what physical silver is worth in the real world. But right now, that link is broken. The paper market says silver is $75. The physical market says you can't have any at any price. One of these is lying. Which one do you believe? The computer screen or the empty shelves? The Perth Mint, the first crack. Let's start with the Perth Mint in Australia. This is one of the most respected mints in the world. They've been producing bullion for over a century. Before the crash even happened, while silver was still near $117, they sent a notice to wholesale distributors. Here's what it said. Due to increasing worldwide demand for silver bullion products, we have a large backlog of orders. We have decided to pause taking wholesale orders until February 23rd to clear back orders. Read that carefully. Increasing demand, large backlog, pausing orders. Nearly a full month with no new wholesale sales. They're also implementing monthly allocations. That's rationing language. This is not a temporary glitch. This is a government-backed mint saying they cannot keep up. Australia is one of the world's largest silver producers, and their own mint can't source enough metal. Then the crash happened. Silver dropped from $117 to $75. Ask yourself this: if demand was already overwhelming supply at $117, what do you think happened at $75? Every serious buyer on earth just saw a 22% discount on an asset that mints can't keep in stock. They bought everything. The crash didn't kill demand, it exploded it. The US Mint, India, the UK, same story. The US Mint suspended silver sales. They couldn't keep up with price changes. They were selling silver eagles below replacement cost, so they shut it down. When sales resumed, prices jumped 86% overnight. India? Dealers are defaulting on deliveries. People are paying for silver and not receiving it. The Royal Mint in the UK? Out of stock, even on basic kilo bars. This isn't coincidence. This is systemic stress. Even Costco is now rationing silver, a bulk retailer limiting silver purchases. That alone should tell you everything. Shanghai, the most alarming data. Now let's talk about China. Shanghai Futures Exchange data from today shows total vault inventory, 455 metric tons, one-day withdrawal, 26.9 metric tons. That's nearly 870,000 ounces removed in a single day. At this rate, Shanghai vaults could be drained in weeks. China has already restricted silver exports. They've classified silver as a strategic asset. While Western markets dump paper, China is taking delivery. One side is selling promises. The other is hoarding metal. Which side do you think understands value? Who is actually doing the selling? Nearly all of the selling occurred during U.S. market hours, not Asia, not Europe. New York opens, silver dumps. New York closes, silver stabilizes. This pattern repeated all week. The West sells paper, the East buys physical. That's not random, that's structural. Lease rates, the final warning. Silver lease rates have exploded. Normal markets, 0.3, 0.5%. Now, 8%, 20%. Some reports up to 39%. That's panic. That's what happens when there isn't enough metal to lend. What this means for you. If you hold physical silver, do not panic. Look at the facts. Mints suspended, vaults draining lease rates, exploding global shortages growing. The paper price is noise. If you hold paper silver, ask yourself, can it actually be delivered? If you're trying to buy, good luck. Premiums are exploding globally. Final thought. The price crashed. The metal disappeared. One of those is real. One is an illusion. This is not a free market. It's a paper system colliding with physical reality, and you get to choose which side you're on. I'll keep bringing updates as this unfolds. Subscribe if you want to stay ahead of it. Drop a comment, paper or physical, who wins? The price is crashing, but you can't buy the product. That's not a market, that's a trick. And now you know how it works. I'll see you in the next one.